Good evening. Thank you, APIDM, for inviting me for this important session. And today we are going to discuss the impact of digital economy and the role of fintech. So I would like to bring you the attention of what COVID has and other things have impacted. But let's first see, there were these three insurance salesmen who approached the same customer. And they were selling life insurance. And the first guy approached the customer and said, "Sir, one of my customers died on a Monday morning, and we got the news by the same day afternoon. And can you believe, sir, a check was ready in the wife's name on Wednesday?" Customer was impressed. The second guy approached the customer, same customer, and said, "Sir, one of my customers died on a Friday morning. And within an hour, we got that information. Can you believe, sir, the money was already deposited into his wife's account, but by that afternoon, the customer was further impressed." Until the third guy approached the same customer and said, "Sir, one of my customers was a maintenance engineer, and he was working on a project at the World Trade Center, and he got on top of the World Trade Center to attend to a maintenance, and there was an issue with insurance, so he called one of our agents. And then while on the phone, he didn't see where he was going, and then he slipped and started falling. And then he shouted to the phone, 'Oh my God, I'm falling down the World Trade Center.' Sir, can you believe? By the time he hit the ground, the money was already in his wife's bank. Whether the insurance company can deliver the promise, we are in an era where that payment can go instantaneously and go into an account at a click of a button. So that, my dear friends, is where we are in terms of evolving into digital economy. So as all of you know, COVID-19 basically impacted everything we do, right? As you see, the picture depicts the queues. People are scared of queues now. They want to do things from home. They want to do things, while on the go. They don't want to go physically minimize physical visits to places. So that's where things are, and that actually is a silver lining for digital economy and driving digital adoption. So which is a good thing amongst the 99.9% bad things what the COVID has brought. This is one of the good things that COVID has given to a digital economy, the required. So let's first briefly look at the context of Sri Lanka, right? So what is the digital landscape and what is the opportunity that is there for fintech? So if you really look at the numbers in terms of digital adoption, right? If you look at if you pay your attention to the diagram on the right hand side, this is statistics from January 2021. We have a population of 21.5 million almost, right? And good thing is we have a significant mobile phone penetration. Actually, it's 141%, which I believe is the number of SIMs issued. Maybe the actual mobile numbers might be slightly lower, but it's a very good number to play with. So we have a very good mobile connection penetration in the country. And we almost have 51% internet penetration, which is about 10.9 million. And then if you really look at where the real number is, we have almost 7.9 million, almost 8 million active social media users, and majority of them are using smartphones, and which is roughly about 37% of the population. However, we have a bit of a caveat, right? Because if you compare this figure to a country like Thailand has about 3.5 times, almost 70 million population, with almost 130% of mobile penetration. But if you look at their population, 50% of their population is urban. But if you look at the first pillar of this diagram, in Sri Lanka, almost only about 19% of the population is urban, and 81% of the population live rural. So that actually itself provides opportunities for fintechs to reach out to this, because all this time, we have been sort of, catering to the Western province and the Western, which if you really look at the number is below 20%. So we have almost greenfield of 81% of the population to target. So that itself is a massive opportunity for fintechs. And we have almost 11 million internet customers who are potential for internet banking. And also we have almost 8 million customers who are using mobile devices, especially the smartphones, to access social, which means there is a ready-made market for mobile payment. And the other area is the country has 996 billion, which is almost 1,000 billion of cash in circulation, which is a massive number, right? And this is as of Q3 2021 payments bulletin of Central Bank. And if we can convert part of this into real digital, then there's a huge opportunity to move people away from cash into digital, and fintech will have a massive role to play. And another area that we have found is, from the statistics of ATMs, more than 65% of the people use Sinhala and Tamil menus, local language menus. There is a massive opportunity for fintechs to address this space through trilingual application. In order to address this, one area certainly are the payments. So how have we sort of gone about actually providing a payment landscape with like seamless transactions? So we have introduced something called Just Pay, which is basically a simply account-to-account based payment network. We have large amount of applications in the market who have been enabled with this. It's very simply a fintech providing an certain solution using an application. If they want to facilitate a payment, they just sign up with one bank and then sign up a customer of any bank who has a bank account as one-time registration. Once that is done, when you simply click to make a payment, the money is being pulled from the customer's bank to the bank of the fintech, and which actually we have seen staggering numbers over the last year or so. Actually, last month it reached more than 1 million transactions within the month, and it reached 4.7 billion worth of transactions. So, which is actually one aspect of digital payments that have been moving in the positive direction. And the second aspect that we have addressed is obviously the merchant friction. We have through decades of cards in the market, but we have had only 87,000 merchants in the market. Actually, 87,000 point of sale terminals issued. So, which is not actually 87,000 merchants, because each supermarket has multiple POS terminals. So certainly it's somewhere around 50 to 60,000 maximum number of merchants we have covered. But 1 year of Lanka QR, we have been able to provide 275,000 merchants with Lanka QR. So we have now enabled 275,000 merchants with Lanka QR capability, which is simply replacing the point of sale terminal with a QR code, which is just a sticker. And anybody who has a smartphone and also having a Lanka QR capable application can make a payment to that merchant. So which is actually providing different opportunities to fintechs. Another area that we have looked at is actually there are apps like Zelle and several other apps which are facilitating peer-to-peer payments across the world. But all this time, when you want to make a payment to another party, the way we have enabled, especially through internet banking, you need to create a profile of the person's, the name, the bank account, branch code, bank account number. All these things have to be provided. But what if you are doing a lot of ad hoc payments? You need to pay your plumber, you need to pay your the mason, you need to pay your electrician, and these are one-off payments, right? And for right now, with internet banking, you have to create a profile each time, and would the Generation Z going to do that? So we have come up with a solution which is sort of equivalent to what is called UPI in India, which is again a peer-to-peer facilitator, where a bank would be assigning a nickname, which we call a payment exchange name for every account, and which is linked to their registered mobile. So in that sense, when I want to send money to somebody, all I need to know is that person's nickname and the mobile number. So I use my whatever app that I have, I select, through my contact list, a person's mobile number. The app will display the nicknames the person has. So the nicknames could be linked to three bank accounts across three banks. And I just simply select the nickname and send the money. And the back end, the money funds get transferred from one bank account to the other. So this is actually going to simplify the whole payment ecosystem for peer-to-peer payment. And the other area that we have looked at is there are lots of payments that we have to make for government for different services that we have to take. So this actually originated as a requirement for customs, because customs was open 24/7. But if you want to make a payment to clear the goods towards a customs declaration, you had to do it before 3 o'clock. You had to go to a state bank and get a pay order. Either give a check or make a payment, and then take that receipt and go to customs, and it was a humongous amount of manual work, and especially during COVID, this was cumbersome. So we simply implemented the system. All the customer need to do is go to the internet banking and select the type of government payment. So we have customs, we have Inland Revenue, we have Sri Lanka Ports Authority, we have BOI, we have Import Export Control, and so many other departments, almost 7 departments already connected. So all they need to do is go to the internet banking and select the department and provide the unique identifier. For example, in customs sense, you enter the CUSDEC number, and then the system will provide the details of the payment, how much to pay. All you need to do is click the amount, the pay button if you agree, and the funds will automatically get transferred from your account to customs account, and automatically the customs database is updated, a receipt is generated, and the receipt number is provided to the customer, either to take a printout and go and get the goods cleared, even on a Sunday midnight, or take a print, take a copy of that in your mobile and show them, and you can get the goods cleared. So this is where things are moving towards government payments. And also another area that we have addressed in terms of enabling the environment, what we call the national card scheme, right? So we have seen many cards in the market, and especially for if you are a merchant, and on the merchant side, we have to bear 3 to 3.5% of commission, right? And this was a sort of for larger supermarkets, this was not, or larger shops or larger retail outlets, this was not a deal breaker. But for the smaller guy, who probably making 5% of profit from something good he or she sells, giving 3% to a bank was a deal breaker. So they used to either charge the customer that 3%, or say, you are not giving a discount because you are paying via card, right? So which was a deal breaker for the customer. So always the customers used to pay with cash because of this, especially for the small time merchants. So now we've introduced this card, which is an international standard card, which is comparable to the existing cards in the market. And we have brought the commission down to 1%. And also soon this card is going to be enabled on tap and go mode in transport. So it can be your debit, credit card, and also your transport card for tap and go, or any other tap and go payment. So again, another enabling environment which has provided, especially the fintechs, the capability to go with a lower commission rate. And last but not least, the enabling environment, especially in some of the, especially if you look at customs and others, there's a lot of documentation that you need to do. And even though the payment was digital through maybe internet banking, there's a humongous of files of documents that you have to physically carry. So that's where we sort of introduced digital signatures. So now starting from customs, going into other departments, now the traders can submit their documents digitally signed electronically to customs Asikuda system and get their goods cleared. So this enabling environment has created an opportunity, a set of opportunities for fintechs to dive into different solutions. So coming into fintechs with the enabling environment, what we would really like to see coming from fintechs is actually finding solutions to people's problems. So what we have seen some of the fintechs going in is they think that payment is the problem. Actually, payment is only a byproduct of the problem. And because what actually happens is there is a requirement. I mean, if you really take the case of ride sharing, right? Uber came into market, and then say Pick Me came into market. And what did they do? Payment or Uber or Pick Me is not a payment app, right? It's basically provided convenience to the consumer. From wherever he or she is, whether it's home or wherever they are, they can just get a three-wheeler or some way of some vehicle to go from A to B. So they are basically providing a convenient way from going from A to B. And payment is only a byproduct of that requirement. So the role of fintechs is actually not just facilitating the payment, which already there are existing payment channels. They need to come up with solutions that solves people's problems. If you find solutions that solve people's problems, there will be adoption. So all this time, what we have seen is we have seen so much of internet banking, mobile payment apps, mobile banking apps, but the adoption has been low. Because obviously there had been no compelling reason for people to move, other than COVID obviously pushed people because you could go and get cash, but it basically pushed people to digital because of no option. But I think what the fintechs need to do is they need to come up with solutions and plug with the existing enabling environment, and we will see adoption going through the roof. So I think that is where the enabling environment will facilitate fintechs to come on board and provide solutions to address real problems of people. Right? And what are some of those impacts that is going to bring to the economy? If you really look at cash, right? Based as I said, there's almost 1,000 billion worth of cash in circulation, and regional studies have shown that it costs a country or an economy almost 1.5% of GDP to maintain cash, which is printing, distributing, cleaning, recycling, providing security. All this actually that's a huge cost. So this is a huge economic saving that we can drive towards by moving away from cash. The second one is obviously saving in foreign exchange. As we know, especially with the international card schemes in the market, and also say, for example, if you are using cards, if you have been using cards, the transaction is you go to a supermarket and do a transaction. The transaction should be between your bank and the bank of the merchant. And more than 95% of the time, it's two local banks or two local banks that the financial transaction has to go through. But since the card has been issued by an international card scheme, the transaction gets routed internationally, and we have to pay dollars for every single transaction. So if you collect, if you look at cumulatively of the total value of transactions and the amount of money that we are spending, on this in foreign exchange for local transaction, it's actually staggering. It's more than 10 billion, and especially now with the transactions and card and other transactions, digital transaction going up, this number is going to triple, quadruple, and which is a significant right now, especially with the foreign exchange crisis that we are in. If we can save part of this, for local transactions by adopting some of the digital services that are already there, I think that's going to be a huge foreign exchange saving for the country, which is going to benefit the economy. The last but not least point that I want to address is, especially if we get more and more SME base into the market, the small time merchants, who's selling, little things, the small manufacturers, the people selling, things by the roadside, right? One of the problems. So if you just simply look at somebody who's driving a three-wheeler, probably the person owns maybe 50 to 60,000 rupees, for a month. But the problem is this person never deposits that money into a bank account. And because of that, this person never builds a credit history with the bank. So if the person wants, let's say, a 50,000 to 100,000 loan, the bank is not going to give him any loan because there is no credit history. There is no credit worthiness of this because the bank doesn't know the income of this person. So the only person or only option that is left for this person is go to a loan shark and get a loan at probably 10% interest a day. And sometimes they can pay this loan, they'll have to sell their three-wheeler. So especially if you are looking at 81% of the population, rural population, when we are going towards sort of financial inclusivity, we are going towards that segment, we are going to find more and more of these people. And if we bring these people into a digital platform, and very soon we are going to start recording their transactions, And over a 6 months period, the banks would know their income. And say, for example, somebody who makes 50,000 rupees transactions a month or revenue a month, obviously the bank, over a period of 6 months, will be able to give that person maybe a 50,000 loan. So we are going to address a significant social issue, which is access to credit, by moving people into digital today. So I think that's basically the area that I want to cover. And hopefully, with the panel discussion, let's dive deep into some of these areas. Thank you very much, APIDM, again for giving me this opportunity to highlight some of the areas. And let's start the discussion at the panel. Thank you very much.